This is Justin Pulitzer. This is my weekend review video for Sunday, July 17th, 2016. Heck of a couple of weeks in the market. Good amount of material to cover as always. Every day seems to feel like a week these days, so let's just dive right in. So VIX is kissing into the range lows. We can see it's kind of getting pretty bombed out stochastically, and I've talked about this range being purely directional, meaning buying outright puts or outright buying calls or outright buying spreads. Given the fact that we are this low in the range, spreads might not be even as good. You might want to just do outright premium and then spread it off as the IV rises, so you can get some more money on that those premium sales. I've proposed for a while that I think we're going to be in one of these type of consolidation areas. I'd had some people mentioning to me these days that the VIX wasn't really falling. That could be augur as poor for the markets. I'll tell you, once the VIX has intrinsic value in the sense that once you get down to these range lows, it's never really going to zero. So you could just have one of these type of chop periods, and you can have days that the market's up and the VIX is maybe not down or up minorly, and it not kind of be the end of the world. Obviously, that is something always to pay attention to. If you have a day where the market is rising and the VIX is rising strongly, that does not bode well. So range low, I often talk about the probabilities. Yes, it's possible the VIX does go a little bit lower, but the probability, I wouldn't say bet on that. I would probably be more thinking of waiting for the VIX to pop in order to use that for premium sales and so on and so forth. How to use the VIX. A lot of people like to play the VIX directly, buying calls and puts. I find that as being folly. I prefer, besides using highfalutin words that can be entertaining, to use this to gauge the S&P 500 and how I would play it via premium. The caveat is if we do go into full-on, blow off top mode, this isn't going to really matter. But if you, are long and you're worried, and I can tell based on some polls I've done, I'm going to talk about those in a second, that people are really still in disbelief of this rally. They don't really seem to think it has. They don't think it should be this high. They don't believe it. They don't think it's sustainable, and that's probably why it's going to be going higher. I mean, check this out. I did a couple of polls last week, and for example, on 7/13, I did a poll. I said, "Are you bullish, bearish, or neutral?" And I put in the hashtag SPY and SPX. 44% of people said bullish, 30% said bearish, and 26% said neutral. It amazes me that the market is at all-time highs. All-time is a long time, and you're still under 50% of the people responding saying that the market's bullish. Conversely, let's see. Actually, this is a complete confirmation, I would say, of that. I did one 7/15. I got the results here. SPY higher or lower for next week. 34% of the people said higher, 52% said lower, and 14% said flat. That is really hardly a vote of confidence. I would say that there's no market exuberance. Everyone's always talking about euphoric markets. That is far, far from euphoric. So market could easily drift still higher. I think that would actually be the more pain trade if the market just does a slow grind higher. It could also just do it in leaps and vaults. If it does it in the leaps and vaults, it's far less sustainable. We'll talk about that when we get to SPY. Some things to be slightly concerned about, and that is the dollar. This is a kind of a bull flag. It is up kind of to the upper point of the channel. 200-day has been resistance. If we were to clear the 200-day and get over the UUP over 2506, I think we would very easily see the 2523s and potentially even higher to the range high. That would not be great for SPY. The dollar rallying hurts companies that do business overseas, repatriation. I don't want to get too in depth about that, but you really want a more benign, meaning sideways to, I guess, down dollar as opposed to one that moves higher. So keep an eye on this. This could be a potential monkey wrench if the dollar is to rally. So the bonds. This is really what it's all about. For those of you that don't know, this is kind of the big show. Why the markets are up so much? Why it's the Fed. It's really that simple. And the lack thereof of money demand. Look where we've come from. You had the double bottom here. It rallied up. I had said we're getting into some rarefied air. We were above this channel high and getting close to this. Had a bit of a pullback. From this to this, I did a measured move that would be 135.58. That's moved up. That's roughly about the 50% and close to this high. We are just back testing the recent high. So yes, we are off the highs, but it doesn't necessarily mean TLT is bearish. So kind of a funny thing happened on the way to the weekend review. I've been noticing in the market, I guess the disbelievers of the up move in the stock market like to kind of want their cake and have it too. It almost reminds me of Way of the Dragon when Chuck Norris is fighting Bruce Lee. And he starts off with very confident and in his own style, and then he's getting beaten up, and then he tries to switch to Bruce Lee's style, and then he just gets completely pummeled. The point of that being is that the bears want to have it both ways. They say that when TLT is rising, that's bad for the market. I've discussed that at great length in previous videos. I don't really want to cover it again here, but this all has to do with PE multiple premium and discounted cash flow valuations, DCF. As interest rates go lower, the PE multiple premium, meaning as bonds rise, the PE multiple premium that should be placed on stock should be higher, and as it comes down, it should be lower. I've talked about being able to pull back. Given the fact that where we are in the range, how high this is, that even a little bit of a pullback doesn't necessarily make a difference. You just don't want to see one of these, a complete collapse. That to me would be troublesome for the PE multiple premium thesis. Anyway, the point of my Bruce Lee, Chuck Norris analogy is that on runs in the TLT, the bears like to point out, this could be recessionary, and then when it pulls back, the same people who were arguing that a rise in rate in TLT and a lowering in rates augurs poorly, then like to say, TLT is pulling back, and then it's bad for bad for stocks, meaning that you're going to get the PE multiple compression. It doesn't work that way. It's got to be one or the other. I'll keep it this simple. TLT ran a heck of a lot, and I think that a pullback to somewhere in these kind of breakout range areas, as low as 133s, it's a big move off the top, but it would be a $10 move off the top. But look where you would be. You'd be basically near these highs and these highs, in here. I don't think that is necessarily bearish. I think it would actually be a little bit healthy. I think that would also take a little bit of the froth off the top for the people who are saying the Fed is dead, so to speak. They're not going to be involved. Remember what happened the last time when the Fed got overly priced out? We had that kind of big regurgitation in the markets, and you had this major kind of, spike in the probability of a rate hike. So it wouldn't be bad for me if this were to come in a little bit and just even that out a smidge. You don't want to be coming in, too much on the highs. Then, you're prone to kind of larger breaks. So watching this come in, I like playing this with some put ratios for a move down into some of these reference support areas, meaning, buy one of these puts and then sell 2 times out of the money, at one of the fib retracements, either the 135s or really probably the 133s. To me would be a little bit more, make a little bit more sense. But PE multiple premium still that thesis is still intact. Like I said, just retesting the breakout area, and there could even be a little bit more move down to retest these breakout areas, and the PE multiple premium thesis still be intact. The real problems for markets and when you get the big crash scenarios are when you have this type of action, when credit, the premium that people are ascribing to risky bonds over the risk-free bonds, meaning TLT, gets blown out. That's when you start having problems, when there are fears of credit. This, I believe, happened because of the fall in oil prices. A lot of companies borrowed a lot of money based on the fact that they'd be able to produce pump and sell expensive oil. Oil was in free fall. That debt was in question. There has been quite a rebound in the price of oil and a quite rebound of the HYG. I think a lot of the companies, and we'll talk about oil in a minute, I think a lot of the companies that were kind of under the gun were able to sell forwards and futures into the market, and were able to kind of hedge off a lot of that, kind of shut off the lights risk. At least you'd hope they did. There were some bankruptcies and some of the weak players, like the Lin Energies and so on and so forth. Amazing to have seen how that stock completely collapsed. Anyway, we are above trend, kind of just chopping. I informally drew in a regression line. As long as you're on the kind of the right, I guess the left side of it, if you were kind of up straight, you could say the right side of it, meaning the right, literally the moral right of it. But as long as you're on this side of it, I think it's kind of okay. If you start getting back to the other side, it would be a little bit more concerning to me. My screen is frozen, which is always annoying. While we're letting that unfreeze, which it just did, which is nice. 50 MA is important. If this does wind up falling back, I think that there could be a play to the 50 MA, and I would put spreads or ratios for a move down to there. 200 was really the big story. Once it cleared, it's been rock solid support, and that's starting to bend up for the first time in a long time. Until we really start getting back below the 200, I'm not going to think that there's anything to worry about credit-wise. If that were to happen, then I would start getting a little bit more concerned. The oil ran up to where I thought I thought we'd see 49s to 52s max. It topped out at 51.67, and it's been engaged in a rather controlled pullback. Stochastics are first starting to get a little bit oversold. There is some room still for a little bit more. It's as long as we're in this kind of controlled pattern, I don't think that there's going to be too much fireworks. If you start getting into one of these or one of these, then we're going to have to revisit. Usually it starts out this way anyway. It kind of, in the end, could end with a more steep decline, but that's not really my thinking right here. I think it's just working off some of this really big rally. The fibs are a long way from Kansas Toto, so to speak. That's the kind of the line I always use. 50%, being the the ideal point to start loading up if you're playing for a pullback. But I don't know that we're going to get that. I will say one thing that's a little bit concerning for me is the Baker Hughes rig counts have been about 7 weeks of rise. I think this week was another 21 rigs or so. So I think that's why that this is starting to pull back a little bit. You're getting more supply throwing another shrimp on the babby, so to speak. As those rigs come back online, as more supply is pumped, price would come down. That's a simple supply-demand function. So we have to keep an eye on that. I do think overall global demand will eventually start eating into some of the supply. If you look at some of the figures, we're pumping twice as much and using just about basically pumping just as hard to produce as simply as much oil. So that's, there's a lot of people with the peak oil theory. I don't even want to get into that, but I don't think that we're going to really come back down and retest all of these lows. 45s to 42s, that kind of keeps the wheels on the wagon. If we start losing that, it's not going to be a pretty situation, and we'll discuss and revisit that when we get there. A couple of things that tell me that we're not kind of in panic mode yet are XLE. This has been kind of just hovering around as oil has pulled back. This has just been kind of chopping around this high. There was a bit of a breakdown up in the 72s, so if it does rally, there could be some potential muscle memory. You can see this was the support, and then when this broke, you had kind of the retest, and then it really fell out of bed. So this area up in the 72s will be 71.93 to 72.51 is likely some resistance. I like that it's consolidating a little bit ahead of there. 200 was, once you saw that break, we were never able to really get back above there. We did get back above, and we haven't really, it's been so strong that we haven't really had a retest. If there were to be some type of a retest of the 200, I would be interested in, particularly if it coincides with like some kind of horizontal past support, I'd be interested in that for a row trade. The way I've been playing it, though, has been via long XOM. Yeah, that is the way to go. The concerns that I have. You have some reference level here in the 97 quarter. You're coming up into a channel high after a really epic run. It's been showing a little bit of relative weakness lately in the tape. I do think at some point Exxon is going to see a hundo again on its way back to par, but as we get closer to that, you know, I'm looking to take some profits. I've had some puts that have been some short puts. That's one of the ways I've been playing this that have been expiring, and I'm looking to kind of reload on like on moves like this that give you the opportunity. So we're trading on the upside of the channel. We're getting close to here. So on pops and Exxon, I'm looking to book some profits, and then as it, you know, when it pulls back, I'll be looking to kind of reload those positions in Exxon. One of the things that I find a little encouraging here is the better performance of China. You can see the pattern is starting to shift bullish again. Higher lows and now some higher highs. We can see that this rascally 200-day moving average, yeah, let me zoom in a little bit more, had been some unsustainable moving above it. Finally, we're above it. Finally, we're above this high, firmly over the down trend, and maybe we want to rally to the channel high. If that does happen, that would be pretty bullish, I think, for the market. There is an old uptrend line here that was roughly held. It was violated a few times, but once it really snapped is when things kind of got fugly. Yeah, so if we could get to the backside of there, somewhere between there and the channel high, it's probably a good area to start letting some of the long out. But this really just broke out. I would think that a pullback is buyable into these highs here, into these 34s for at least a right or right out trade. But China is looking a little bit better. BABA is one of the stocks that I get a lot of questions on. This stock is just a mess. It has so many false dawns and so many false breakdowns. It's into some resistance area where, if you look in the volume profile here, this is just where the past, I guess, resistance has been, where there had been some support, became resistance. There's so many distributions of price about people who have traded around this area that it's kind of consolidating here. I do think that this is going to see 90, 100 again. I just think there's easier ways to play it. I mean, look at this choppy mess. Why? Just why? I'd rather be involved in a stock that is a little less dicey. That said, 200 MA here with support here, and has been some support again. I think that if this was moved to the lower end of the range in the 200 MA, I would like selling out of the money puts for that. One I don't cover very often is this BIDU. There's a wedge here. You can see here it's making some higher lows and some lower highs. This did break an intermediate uptrend within the wedge, so it's kind of a little bit more iffy. They have earnings coming up. I'll tell you this. I'd be interested, given the fact that this is kind of just chopping here, if you were to get a gap below the wedge, I think it would have some continuation to fill up the triangle, so to speak. Or if you have a gap above, I think that could give you some bounce for your ounce for a move back up. So I'm waiting for a definitive break of the triangle to play as a go with, given the fact that we're consolidating in this range. They're reporting 728, so if there were to be like a breakdown ahead of time, I might be an interested buyer there for like a retest of the backside. And if this were to like break out and move up really high, then I might be inclined to fade. But I might, more than likely, my guess is that this is going to compress a little bit, and then you'll get the move and be able to play for continuation after the number. Sort of the second mouse gets the cheese. I always like that expression. IBB really just chopping around here back near the past, I guess, past resistance, which became sort of some support, which is now a little bit of resistance again. You can see you've just had like these 100% retracements in range. I think this sort of got right down to the range low from the top. I always say, you know, coming down from the top or coming up from the bottom, meaning you've moved a lot already. I'm just waiting for this to either break down here for a move to get the full completion, or more likely than not, a move, you know, back up here. I'd love to see some like consolidation and then go, but this to me is just a range-bound play until it's not. I'm not really effing around with it, so to speak, around this area. Gilead had this sort of false breakdown. It's now back up into some past resistance area. This stock is very cheap on a PE multiple basis, but if this really is experiencing peak earnings, that multiple will look a lot more expensive. Earnings are on 725. If this is a move lower into the number, I might be inclined to play long. If they rally it up hard, like into the downtrend line, like coming up from the bottom into the downtrend, I might be inclined to try a right or right out short. If it then gaps over the downtrend line, you know, that could also be a fade up into these past levels. I do think at some point it is going to fill this gap up here into the 97s to 100 area. So I'd be more inclined to try to fade up there. It's also kind of mid-range here. So I like it. I guess I like it more long than short, given the fact, just short term, given the fact that you kind of had this like look below and fail, come up, another look below and fail and come up. So I think that this will probably, my guess is rally into the earnings. But we'll see. Easier money in other more defined trending stocks. My theme is always, I like to buy stocks that are making higher highs and higher lows, and not like to play the guessing game with stocks like this that are kind of hovering around the lows and, you know, waiting for sentencing. One I do like is ALKS. Higher lows and higher highs. It got into some 200 MA resistance. I'd like to buy this on a pullback maybe to 50 MA or to trend again to reload some of the long, but I do think that this is going to get up close to the 50% fib and the 54s, maybe if we're lucky to 60, the 61.8, which is a full gap fill. Keep in mind this came down from all-time highs. Would not surprise me to see that. I've been playing this one long. I've been playing this long with shares and with short puts. I like buying the dips, particularly near the trend or near channel low or 50 MA or something to reference. Last two declines, one has been $6.77. The last one has been $8.25. Any amount of that pullback into here, I am likely going to play for the rally off the kind of BTD by the dip. Precious metals, gold, for example. So we broke a trend line here, retested it, and it's just been kind of off to the races. Gold is pulling back a bit. It's been very heavily chased. I've had a lot of people asking me about it. Notice what I talk about coming up from the bottom. I would be an interested buyer. Probably this was the breakout. I think somewhere around the 50% or 61.8. I'd probably be a seller of short-term puts that would coincide roughly with the channel low. That's just sort of how I'm playing it. If you want to play it with, I remember what I was talking about with the dollar rising. If the dollar does break out, gold is going to come down. I like the idea of playing put spreads or put ratios more to play for a pullback with that. Same thing with silver. I had been long this for a while from 14s. I started unloading a little bit here, a little bit too soon actually. It got up quite high in a little bit of a pullback mode. I do think that silver is going higher longer term, but I would probably be a reloader somewhere around the 17 area, which was kind of the past breakout, and the 1672, which is the 61.8 and the 50% fib. It's also mid-channel. Since we broke the channel, you often have a move back mid-channel, and this is also some reference area. So I like that area for a buy the dip. Listen, this could easily just continue on. But if you're telling me that a rally that started at 15, that's now in the 19s, and you are first buying with great trade location, you grew up in a different, you grew up with a different schooling than I did. I like to buy the dips on rallying stocks. Seems like it's turning for commodities too. Coal is looking like it's bottomed and into a bit of a bullish cycle, getting close to the top of the channel. I bought this a while back. I bought it a little early, but I'm green on it. I'm kind of just going to hold this for a while. It seems to me that maybe coal has finally seen the worst of it. Just something to think about. Anyway, let's get into it. The real meat and potatoes here of the SPY. All-time highs, and all-time is a long time. Look at this. This was the box that I talk about. We're into some fib extensions here, which I talked about in last week's video. The big one of which is up near the 1.618 fib extension from this high to this low, it projected higher. I do think that could be in play. I don't necessarily know that we're not going to chop or pull back to the breakout area to retest the breakout area. So what would be an acceptable pullback? Remember, most people seem to think there's going to be a pullback. So it wouldn't surprise me if this does just continue on. You have a lot of people who are, I believe, still short, who didn't believe the move. This was Brexit. You had 2 days of very vicious selling. This really ran. This was sort of a false breakout, which I think would have likely consolidated and then went if we didn't get the Brexit. But a lot of people didn't really understand Brexit. They thought it was going to be this really bearish thing because those who were against Brexit really were fear-mongering and pushed it as kind of the end of the world. I was one of the lone wolves who said that I thought Brexit was a positive thing and that I was looking to be a buyer of the Brexit pullback because Brexit isn't bad. It's actually a very pro-growth an event. One of the things that really disturbed me this week, though, was Cameron is out and May, I guess the new prime minister is in, and she really sounded to me like almost like she was kind of backing away from Brexit, and that to me would not bode well for the Brits. Freedom is always the right choice. Their currency is going to come down. People are going to go over there and buy their real estate. I think it'll be a boom for industry once the certainty of it is kind of baked in. Short term, there might be a little bit of pain in that department, but their markets are at all-time highs like we are. So obviously the market likes the Brexit. Anyway, with regard to if there is a pullback, you've seen where I think we could go to the upside. If we were to have a pullback and there was to be a move lower, obviously the first line would be the old all-time high, which would be 213.78. The failed, the old reference high, 212.52. So somewhere in here would make a lot of sense. If it does get a little bit more could be near the Brexit highs, which was 110.87 to 211, which is here. Remember how I said that the market needed to clear 210 to 211 for new all-time highs? Look what happened when it did. This was the gap and go. So that to me is really the key level to hold. If this pulled back, a 210 to 11 really would be the area for me that it needs to hold. And yeah, there's a gap fill of 209.53, close enough for government work for me to 210. If that were to happen, if we were to get a pullback for the fill. A lot of people, I think, would be bearish. They'd say that this was a false breakout because these highs didn't hold. But believe it or not, a move back to mid-range after a breakout is very normal. Again, different schools of thought here. I do think, though, that there are still a lot of people short, and a move back into this area would likely get bought. So those are my targets if there is an up move or a down move. I think given the amount of people that are still bearish in the market that we will get to those upside areas, but this is an order of operations issue. I don't necessarily know that there's not going to be a little bit of pullback, and I did discuss taking a little bit of profits up at this 1.272 Fibonacci extension. How to calculate the Fibonacci extensions? Very simple. You take this high, you subtract this low, you take that number, you multiply it by the fib extension, and then add it to the low. Very simple. That's how you get the projections higher. So I'm thinking we do see the 1.618, but I don't know that there's not going to be a little chop in consolidation ahead of time. I actually think that would be more sustainable. If this just keeps going right up here, this is going to set up for a great right or right out short, because look what happened. You came up from the bottom. You were at a channel low. You gunned immediately with basically no pause to a channel high. If we are in blow-off mode, this could just explode through here. That would be potentially, if there's no pullback, the great short that everyone has been kind of waiting for, the naysayers. I think that they'd all have been blown out. You'd have we often talk about what a difference is between a professional gap and a retail gap would be. And I'll show you. If this just comes up here and then you have this big gap and it's a big candle body to the upside with tons of volume, that will be the end of the move in my view. It would be, the capitulatory move. That's what we're always looking for: capitulation on the downside, capitulation on the upside. I don't think we've seen that from the shorts yet. I talked about in the Periscope that as this market has been rising, I've seen a lot of people, bears, talking about adding to underwater positions and bragging about it and sort of high-fiving as if they were adding to profitable trades. It's insanity to me. I don't want to get into what a euphoric market looks like that took place in the 90s. I gave some great examples of that in Periscope. If you didn't see my Periscope this week, a lot of people said it was my best one I've ever done. I can always be inclined to agree with that, but I think I really get into a lot of depth that I did discuss what the market was like in the 90s a bit and what a euphoric market really does look like, and I'll tell you, we're not in one. I've never seen this level of pessimism and skepticism at all-time highs before, like we are now. So that's my thoughts. I think we're going to get up to this area, but I don't know that we're not going to pull back here a little bit first. My theory: as we rise, we book profits into that. I haven't been, when I was buying based off the Brexit, now I'm starting to let out some of those longs into, my targets. I'm sort of the school where you buy low and then you sell high. I know a lot of people like to chase, but that's just how I was brought up and how I trade. If we do wind up getting a little bit of a pullback and to retest these breakout areas, I will be a right or right out buyer for a trade. That's just how I roll. The expected move this week is roughly $2.38.5. So that would be 218.22, which could easily overshoot to up here, since 218 is really just above these highs. If there's a pullback, that would take you down to 213.45. Which is roughly into this area. If this comes down harder, that number might expand given where we are in the VIX range. When we pull back, the VIX accelerates. So I think that it's sort of, This is why everyone likes to short. It's an asymmetric risk. The moves up tend to be kind of slower. When we come down, they sometimes can be a little bit faster. So that's my theory. I think that this area, 10-day moving average is roughly, look, where I had said this 212. So this is really where I think we would pull back to. And if we rally up, I do think we would see the 1.618 fib. Again, I don't want to keep repeating myself, but this will be an area to sell. And if you're inclined to short, the VIX will be real low then. You could put on buy SPY puts or put spreads real cheap. XLF, the financials, everyone's talking about the financials not confirming and it being bearish. My 2 cents on that is just that they're hobbled based on the ability to earn money in this type of a market environment. JP Morgan reported, and their numbers were okay. You have Bank of America and a few other ones that are coming up that might not be as good. This could be one of the little flies in the ointment just because this is setting up for a bit of a mini head and shoulders. Believe it or not, JP Morgan, as bullish as they were, their little rally, this completed where I thought we could, if you kind of X out this noise below here, this is kind of forming a bit of a head and shoulders. If we were to take this head out above the 66s, we will see 70, in my view, in a blink. And that could be your catalyst for a blow off top, maybe when these financials finally participate. If this fails, obviously, we could be retesting the Jamie Dimon, the Diamond bottom, right? This is where he made the statement buy, and we've never looked back. I was surprised that this never got retested, but we held. I mean, you have double bottoms, and we're back near the highs. The bulls, I think the best thing that they could hope for is some sideways consolidation to work off. Again, remember, coming up from the bottom, a move above the downtrend is less likely to be successful if it's already run a lot. I think that if they kind of consolidated here and then took it, that would be the best case scenario. Pullback wise, if you want to play, you have some a pretty defined 200 MA. I think that would be the first point of target. Goldman Sachs is reporting next week, I believe. So you had a pretty textbook head and shoulders, a breakdown, a kind of like a failed. I guess I don't even know. I was really looking for a bit more on the check back, but you have double bottoms in place here. You're coming up from the bottom, and believe it or not, the primary trend line. I don't want to go back and show how far that came, but you can see we touched it. We've come up quite a bit. I think that this gap could be filled if it's good. I think that would get a lot of people excited, but this area to me would be an area to start selling because, again, it came up from the bottom. So I would watch for the trend line here to be the first point of resistance, this past neckline to be the next, and then the gap fill to be the next. I don't necessarily know that we're going to get there, but I do know that if we break this swing high, the 689.90, and it's on a move above the downtrend line, this gap fill will be in play, and I will likely be playing it, probably with call spreads or something along those lines. But again, we're coming up from the bottom. It will be an area to sell into, not to buy. All right, I think I spoke my piece on that. One of the fins I do like is this AMBAC. I talked about this in the other video that we're forming a bit of a rounded bottom. We've broken the downtrend. We're right up into reference highs. We'll have to see if this is going to, go sideways and get through. It could consolidate. It could even pull back mid-range, but I do believe that 50 MA now is a buy for right or right out trade. This to me is a longer-term hold. Someone was asking me about stops on this. If we were to lose more of this, if we were to lose this entire range, since I have pretty good location on it, or more than half of the range, I might scale back the position a bit, but I'm playing for a longer-term play. My theory on this is just that it's the golden age to issue debt, and companies with that are kind of sketchy creditworthiness are going to come to AMBAC and pay a premium to get a AAA rating to issue bonds at interest rates that they have no business ever getting. AMBAC would be the material beneficiary from that. I remember I briefly worked at a Wall Street firm, and AMBAC bonds were pretty popular back in the day. What's happened before will happen again. IWM into some old resistance areas that were old supports. Does not surprise me that it is just kind of consolidating into this area. Sideways consolidation to me up here would be bullish, considering we took out the last swing high. If this were to fall, I think we would probably come back down to mid-range here, close to the 115s. I think the expected move for next week is like $1.92-ish, so not too much expected. Look where the low of this box was. I think I had said that this was 114.92. Yeah, 114.29. So that's the 50 MA. If this were to have a pullback, I like put spreads or put ratios to play for a move down into that area, given that we're into some past resistance. If this decides to consolidate a little and go, then I think we're going to see the channel high. Just my take on it. Qs. So IBM is reporting on Monday. That's going to be a big thing for the Dow and probably for Qs. You have some old resistance up in this area. I like that we finally took out these last highs. So a little megaphone-ish in the fact that we made a lower low. It was a false breakdown below trend, and now we're just back up on it into this gap fill. I think the gap fill is a little less significant because we basically filled it close to the last time. You know how I sometimes talk about if we get down to a fib level, like ahead of the fib, it bounces and then we come back down to the fib and it's a little bit below the last, that I don't really like buying that fib because it was kind of already tested close enough. This is already close enough, so I don't make this gap fill as being as significant. A lot of this is going to depend on Apple. That's starting to look a little bit better. But, yeah, I mean, as long as we're above these swing highs, the trade is still, long. I would think you want to be a little bit more bullish and thinking more buy the dips. I would love to see it come back down and retest the backside of this old kind of, I wouldn't say downtrend but I guess mild downtrend, particularly if it coincides with the 10-day moving average. I think as long as you're really above 109.38 and above this area, it's kind of okay. I'd be looking to buy somewhere in here for a right or right out trade if there is a pullback, or to play that via, if we do get a breakdown back below these, these few days. What's the low here? 111.21. Maybe buy some. For near day, for quick play, for a quick short, for a move back down to retest that kind of breakout area. Expected move in the Q this week is only $1.50 though, not a huge deal. As far as the IBM goes, you broke one downtrend and you're coming into another. So I think some poppage into the gap fill area, which was 173.22. Somewhere between here and there is probably going to be some resistance. There's another gap fill up here. I just don't see this doing this all on this earnings, given the fact that it's run a lot. I do like that it consolidated. It came from range low and we're breaking out. So I think up here is probably where you'd want to be a seller if you do get some rally ahead of there. The earnings that are coming up are on Monday. So if this was ahead of the number to move down, it would maybe be a long for the number. But if this continues to rally, it could be a fade. IBM has been plagued with a really cruddy business model for quite some time. I know Warren Buffett is long. I want to see how this reacts. The first couple of earnings like IBM and Netflix, which is coming up, I kind of like to. Here's the analogy: if you're playing baseball, never to kind of swing at the first pitch of a pitcher. You want to see the pitch, so to speak. That's how I think about the first couple of ones, like the Netflix and the IBMs. You just want to see how the market reacts. Is it a gap and fade? Is it a drop and pop? You want to see the kind of the mood and how the market takes numbers. If the numbers are good and the stock can't rally, like if it's a good number, IBM blows it out and the stock either is a pop and flop or it just can't even rally, then you know that earnings season might be a little bit troubling. If this is a drop and then rally, you know that numbers are being taken in stride. So you want to kind of see you want to get the feel and the character of the earnings season. So that's my advice with these kind of stocks. Apple. So Apple is kind of rallying a little bit ahead of the number. It held, again, these 92s with a bit of a smidgen of a look below and fail, higher low, which is good. We do have a downtrend line. I do think that this is going to fill this gap eventually to the 103s. I just don't know what the order of operations are. If this does it ahead of the number, you could be setting up for a short. 200 MA here has been unsustainable. I think that area would be a great row short. I really would love to see the stock get nailed again on their earnings here to set up for the long for the iPhone 7 release. Given the fact that I want that and everyone wants that, it may not take place. You could just get the rally. My favorite setup for Apple is the shake and bake, where it comes down ahead of the number and then sets up for a long. It has the shake, shake out and then it bakes to the upside. If this just bakes into the number, then yeah, sure, it could continue higher. But again, it would have been coming up from the bottom into resistance. That's my theory. So I want to kind of do the opposite. If Apple sells off ahead of the number, I'll probably be looking to play long. If it rallies into the number, I'll be looking for pullback. Really that simple. Facebook, they have numbers next week. It's just kind of consolidating up at these highs. I talked about being a buyer here. I'm still long some stock. I think I actually sold puts on this move for that play. But we're back up. It's holding the 50 MA. 116.23 was really kind of your range low that I have written in. If it holds the 50 MA, the play is still long, particularly if you get up above these highs, these 1, 2, 3, 4, 5-day highs. Above the 118s, then I think we see the 121s and could even see the progression line up near 125s. I've talked about Fibonacci extensions, 130, 43 is one on one time frame, and then 128.55 is on another. I still think we're going to see that. I just don't know the order of operations. If they sell Facebook off ahead of the number, I would be a buyer. If they rally it ahead, then I'd probably be inclined to book some profits. I'm still long into that play, but if we lose these range lows, I'd probably be looking for a move back into mid-range closer to the 100 MA around the 114. So that would be a quick couple of bucks if you're inclined to play, if there is something like a breakdown. Amazon, we talked about this going to all-time highs and being still a bullish stock. It's just kind of listing begrudgingly back to retest the breakout here. I don't know. I would actually love to see this thing come back mid-range, closer to the 50 MA, which supported here. If it was ahead of the number, if this just kind of sells off for multiple days ahead of the number, it'll probably set up for a right or right out long. But I don't like to chase all-time highs. I like to buy on pullbacks. If you get one of these, it'll probably set up again the same way. Amazon to me still looks bullish. It's weird. It doesn't tend to be a bullish stock in the summer. But yeah, I mean, I think it's just all of these stores that are struggling, all of their business is going to Amazon. People are buying online, so it's sort of a big macro. It's, I guess, seasonal weakness, but it's a big macro trend. If this were to have a full Fibonacci extension, 833.91, it could happen. If you just project the Fib extension on this range, that may be the case. I've been thinking higher in Amazon, so we'll see how that plays out. I would really love if there were to be some kind of a larger pullback to trend. I mean, to really kind of load up for the fourth quarter, but it just doesn't seem like that's going to be the case. I think that this selling here was just a little bit of sell the news on Prime Day. And if this sells off, in a straight line, that would be the shake and bake for the quarter, I think. given the fact that these are kind of poor highs. It's getting the back off on the sell the news. That's all it is. That was Amazon. Netflix, so they report Monday. Again, I don't know what this is going to do. It broke the downtrend, so technically this should really come up and fill the gap. That's really my thinking, but I've for a while have been looking for a longer-term trend line test in Netflix around the 70 level. I kind of have my fingers crossed for that, which probably means it won't happen. So yeah, I think this is either going to be a retest of, I don't know if these lows would hold again because they were double bottoms. Maybe we'd finally, at long last, get that test. But if it is bullish, we're probably going to retest the 108s, maybe even 115s, whichever way you want to play it. I think that there'll be room in this one for continuation after the... Historically, my experience with this is that this is not a bullish quarter for Netflix, I believe, and it usually has some pullback. I have to take a little bit of look for that. I just kind of thought of it. So either, like I said, either we're going to finally get the trend line touch, or this is probably going to retest the highs again. I want to be the second mouse on this. Again, I want to see, this is the first of the momentum names to report. I want to see the initial move, if there is a counter move, and if there's some continuation. That'll help out with how to play the other ones a little bit later on. So again, this is the pitch that I'm not going to be necessarily swinging at. If there were like some kind of massive dump on Monday or some kind of massive rally, then I might be inclined to kind of play the opposite way. Google, again, I was waiting for this touch. It didn't get it. We got a look below and fail, which brought us back up into range. I do think at some point this is going to fill this. I don't think this quarter, I don't remember it being a really strong one for Google. I think it's usually a down one, but if this rallies hard into their number, I will be playing the fade, particularly, after there's a gap fill, a continuation lower, and then when there's the grind up, I usually... It winds up being a fade. So let's see how this trades. If this is just kind of choppy ahead of the number or lower, it may set up for a long. If it rallies hard, then I'm gonna probably be in the fade camp. Again, I don't like really messing with Google until it's at the range, channel extremes, either a fade, a short meaning at the channel high, or a long at the channel low. It's a lot of chop in between that, to me, is not really that eventful or fruitful. Tesla, I'm waiting for this sucker to be a long. As long as this holds the 215, which was the secondary, and the 50 MA, I think it is a long. I like that it's kind of just compressing under the channel, the trend line. If this is a breakout above once you break the trend line, I think we're going to easily be back up at these highs. But I have to kind of say wait for it. You need to see the trend line touch. Trend line break. Once it breaks, then the mechanics of the stock market take over and the stock goes higher. The best case scenario would be to some kind of chop and consolidation and list, lower a little bit or sideways into their print, and then it gets the pop, and then you would get the continuation. I was going to do PayPal here, but I'm going to save the best for last. Chipotle, I talked about this being a row setup, either really for a long or a short. I was thinking it would probably be a long. I liked how this kind of just got up to the 50 MA and was hovering under the old downtrend. I was thinking that this might be a rally into the print, but it got a downgrade and some bad news, and it's coming back down. I was talking about trading this. Someone was like, "Oh, why don't you just buy it this day?" My trigger was going to be over the 2-day high on Friday. If it gapped, I thought it would be a gap and go, but I didn't know that it was going to gap. I knew that it was on the downtrend, the down channel, and the confluence of the old uptrend. And if it broke, I thought that there would be short covering, but I didn't know that it was going to happen. And look, this is why we don't anticipate. You don't kind of load up early. Yeah, if you bought here and then there was the gap and go, you'd have a much better trade location. But I didn't know for a fact that it was going to be a gap and go. I knew that it was into an important area, a downtrend, an old uptrend, a backside resistance, and a 50 MA. So that was the kind of the seeds for the rally, and the fact that it didn't do it, it just came back down into range. They report. I have no idea what Chipotle is going to do. I do not play Chipotle earnings. I once had a very bad experience with Chipotle where I played with a strangle, and it was like a 3 standard deviation gap below the puts, and it wound up being a rough day at the office, so to speak. These are poor lows. I would love to see this Chipotle just dump and get to the channel low to repair these poor lows and set up for a longer-term long, maybe in the lower area. I don't know that that's going to happen, but, obviously this has been some responsive trade. When you have poor lows, there's usually the back off. In this case, it was up, and then the repair. Let's see how this plays out. Their numbers, they're a big story stock with a lot of kind of noise. I'm just not messing with this thing. I do think that there will be continuation, though, in the way of the gap. So if this were to be a gap down, I think it's going to go a lot lower, particularly if it takes out these lows. And if you do have a gap up and it breaks trend, I think that there will be a rally probably a lot higher. The belle of the ball this week was PayPal. And I talked about this last week in the review as a long on the trend break. This really, to me, struck me as more of a bit of a professional gap, and I'll talk about why. You can see that there was a neckline here, sort of old lows that was a breakdown, so you could think that maybe this was going to resist. I didn't think so, because you had these multiple days of consolidation, sort of that consolidation under the trend line, and then you had the gap. I bought it on this day. I didn't even buy it well. I didn't pay the high of the day, but I didn't pay near the low of the day. But I've seen this play before. I know how it plays out. You had a gap over a downtrend line and over a 1, 2, 3, 4, 5-day consolidation. Really, you could even say 6, but this was really the move that got it going. You had the pullback, the consolidation, a move up here, and then the gap and go. This is, if you can master the professional gap and kind of understand when you see this, you'll do well. You'll go far in trading. So that was the setup. You had the big up day, the kind of 3 pullback days, the one that got you right under the downtrend line, and then the gap and go over the downtrend. That was, to me, the and over the range. Sometimes you get a gap up. Someone was asking me, what was it? I think it was MetLife. Someone was asking me if this is a professional gap, and I said I didn't necessarily think it was. It may be. It may have some consolidation, but look, it was right to a one downtrend line. This really shouldn't be green. It should be yellow because it's a secondary. It's not clear to me that it is or it isn't a professional gap. It's right into 50 MA resistance. It was, yes, I mean, technically you're over this range, but look, you're right into another kind of distribution. You have another downtrend line here. You had old reference lows here. I mean, it's consolidating. It may prove to be a professional gap, but you already had a move up. It could be the basis. If you really want to play this one, it would be over 42.98, and then you would want to not be if it gets below 41.85. But to me, if you could see the difference here, you're into the resistance, and on PayPal, you were over. You had the consolidation here. Let me zoom in a little bit more. You had the consolidation here. It was the break of the downtrend and over the range. That's why you got the extension. Now you're getting into some areas here where there's some past resistance, and it had a bit of a pullback here. I would be looking to add to this long if we were to get a little bit more pullback, maybe to the 100 MA. You can see that here was a little bit of support when it broke. Here it was a little smidge of resistance, but I think it should be a support area. I'd probably be a right out long for an add there. And then up in here, to be booking more of those profits, getting close to the backside of the old uptrend line and this old 40.31 to 41 area, I think will be some resistance, considering that would be filling up the triangle for the move up. So PayPal, I'm looking to book some profits on pops, and then maybe add and buy the dips on some moves lower near the 100 and the 50 MA if it gets that low. I don't know that it will or that it won't, but they do have some earnings coming up on 7/21. After a run like this, I'd probably be looking to book some profits. And like I said, on the pops, if it does pull back hard, then, like I said, BTD in my view on PayPal. Anyway, that's my story. I'm sticking to it. If you're not following me on Twitter, my handle is @JustinPulitzer. If you like this video, hit the thumbs up button, and please leave me some comments. Your comments help me make my videos better. Help me help you, as they say. Anyhow, let's have a great trading week, and cheers.